Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. It is Sunday, the 5th of October, and I've got an interesting show for you today. I'm going to do a bit of a combination. All right, it's the end of the quarter. So, as I've done in the past, I kind of review my Outlook 2025 uh, calls, and then I assess how that's gone I did it for the second quarter, first quarter, second quarter, and now I'm doing it for the third quarter. But I'm going to start this show talking about my unicorn picks, and then I'm going to get into the third quarter report card on the Outlook 2025 report, and then I'm going to close it off with some stocks that are catching my attention. So as I was getting ready to do this, I thought, well, I'll put the gold chart. By the way, I use FinViz Elite to get my charts on gold. And I was going to start out with the companies, and I realized as I was getting prepared that gold itself is a unicorn pick. And what I mean by that is that it's in a perfect storm to go a lot higher. What do I mean by the perfect storm? Well, what's caused this beautiful move here from the lower left to the top right is a is the death spiral of debt, which I've commented on a lot in my past reports, the cost of servicing the debt, and that the fiat currency and debt system is broken. But what is fueling this latest rally, and it could be the most important rally we've seen yet since the breakout in early 2024, when gold got above 2100 and then set a series of new record highs, is stagflation. And that is another pillar of what will drive gold a lot higher. Now, isn't it coincidental that when the Fed had their Jackson Hole, Wyoming meeting, and Powell talked about the need to cut interest rates, that gold started to rally? So did silver. Oops, got the wrong thing there. Just cancel that. Silver did the same thing. Sorry, having a little bit of a glitch here. Silver did the same thing. So both gold and silver are seeing that stagflation is picking up. And look back in 1970s, the last bout of stagflation was very bullish for gold, silver, and the precious metal stocks, and it will be again. So in my opinion, gold and silver are unicorn picks as well. Okay, so what do I consider a unicorn pick? Well, I've been a fan of technology for a long time. And In the technology space, when a company has huge success, it's called a unicorn. And I believe gold is a unicorn, silver is a unicorn. And I have some picks that I consider my unicorn picks. Two of those are in gold, one of those is in silver, and one of those is in copper. Considering that I have the gold up here first, I'm going to start with my first unicorn pick, which is Amex Exploration. Now, before I talk about them, as they are a sponsor, I always like people to know which companies sponsor my work. I don't make any apologies that they are a unicorn pick, and it's certainly not because they are a sponsor. It's because of the quality of their project. Their Perron project in Quebec is quite impressive and has been getting a lot more attention around here as the leader of the company, Victor Cantore, has been talking about the path to bringing it into production. Now, before I get into that, what the best zone that they have is called the Champagne Zone. And I recently did an interview with Victor Cantore talking about the Champagne Zone and its tremendous continuity of high grade, that there's about 850,000 ounces in measured and indicated that has an average grade of 16.2 grams per ton of gold and about another 150 that's an inferred with a 10-gram average grade. So when you consider that, that is a spectacular asset. And so what they plan on doing with that asset is one, and we talked about this on the interview, is that they want to do a bulk sample. Now, they're not just going to take material off the surface and then send it off to a mill nearby and have the gold recovered from it and see what that comes out to. What they're going to do instead is they're permitting to build a ramp into the high grade zone. And it will be a production ramp. So not only will they take a bulk sample from it, but the plan is to also use that as the start of mining when they get their mining permit. Now, something else they're doing is they're assessing through a feasibility study the idea of using the Champagne zone to start production through toll milling. Now, a lot of companies would love to do toll milling, but they can't because they're off in the middle of nowhere and there's no nearby mills that they can use. In the case of Perron, it's perfectly situated in the Abitibi region of Quebec with mills all around that are underutilized and would like to process that material in order to get up to full capacity. And so they have that option. And then the idea is that will be like the first phase is to use toll milling for a few years to and take the profits from that in order to build their own mill on the Perron project. Now, because it's such a high grade, this is a second reason that this is a potentially viable opportunity, option, and why they're assessing the economics of that option. And another beautiful thing about it is that it has a very low capex based on the preliminary economic assessment. And because of the high grade in the Champagne zone, the extreme high grade, that this would has the potential to be a very viable option that they're assessing the economics of through a feasibility study. And so when you take all of these things into consideration, all the where the project is located, close to a mining town. It's in Quebec, which is the one of the best mining jurisdictions in the world. It's got mills all around it. It's in the Abitibi. It has multiple zones, not just the Champagne zone, but the other zones. The total is about 2.5 million ounces in the resources that are still wide open to increase, as is the Champagne zone. And Victor Cantori and I talked about that in our recent interview that I encourage you to listen into. So high grade, low capex, rapid payback. These are the things that I consider a unicorn opportunity. Now, my opinion on that is different than the major mining companies. Major mining companies tend to believe that bigger is better. And in my opinion, bigger in the sense of free cash flow is better. If you have higher production, but you're not making as much money, that's not so good. If you have high free cash flow and that's growing, that's the bigger is better to me. And so when I look at a unicorn opportunity in a gold junior like Amex, I'm assessing, well, how much is it a project that a junior can develop? Does it have low capex? Is it in a good jurisdiction? Can it make that capex back rapidly? And can that then help them build into a much larger gold mining company in this instance? And that Amex's Perron project ticks all that boxes, and that's why they are a unicorn pick as a developer, in my opinion. And do your homework and keep in mind that I'm biased because they are a sponsor, and I'm a shareholder as well. Okay, so the next company is Goliath Resources. Now, Goliath is a pure exploration company. And when I look at exploration companies to assess if they are a unicorn pick, there again, I look at the potential for those key characteristics that I just talked about. CapEx, cost of bringing it into production, rapid payback, grade. And I also put it into the context of, well, is this a project that a major would need to be a strategic investor in? And if I put my hat on and thought of myself as a corporate development person for a major, would I how would I look at the Sherbet discovery of Goliath? And I would be all over it because it's in the Golden Triangle, which is one of the most prolific high grade camps in the world and in Canada. It's very mining friendly. But the real kicker is the high grade. And they've hit mineralization on every hole that they've ever drilled at Sherbet. But what stands out the most to me, and what I always tell people to look at, is in their corporate presentation and in some of their news releases, they include a map that's evolving that displays all the visible gold with the naked eye that's at the Sherbet discovery. And I've been in the exploration business for 32 years. And I've never seen a project in the Golden Triangle with so much visible gold widely distributed over a large area that's like over a kilometer in one dimension, over a kilometer in another dimension, and it has about a kilometer of depth. And inside that area, there is visible gold spread out all over the place. That is what makes this a unicorn. It's what I've called my highest conviction gold pick for with an important discovery for a long time. And it really is a unicorn for me as far as a gold explorer looking for high grade in a well-established camp like the Golden Triangle. These kind of opportunities don't come around very often. The last time I saw one like this, I was all over that, which was Pretium and their Brucejack mine. As many know, I picked it early in their success and around $3 a share. It ultimately was bought out for about $19 a share by Newmont, and it is now one of Newmont's main tier one gold mines in the world. And so um, getting back to my point about if I were running a major gold miner, what would I do? I'd be signing confidentiality agreements and I'd be demanding or at least emphasizing to my management that they should be taking a strategic investment into the company. Now that has already happened with McEwen Inc. has already taken a strategic investment into Goliath through a share swap. So McEwen Mining paid for their position with McEwen Inc. stock, and so Goliath got McEwen Inc. stock and a 10 million of it, and that value has doubled as they've owned it or more. And McEwen Mining got shares in Goliath that are also up almost a double since they took that position. So it was a win-win for both companies. And while I'm on this topic, I think that we're going to see a trend in the with majors. They're making so much free cash flow, but what they're having more challenges with is increasing their production and replacing their old mines with new deposits. And so I think what you're going to see in the not too distant future, it's already starting to happen, but I think it will happen at a much more significant rate, is that majors will become strategic investors into the juniors that have important discoveries, the explorers with important discoveries, and the high quality developers, because and they will want to be what I call the partner of choice. And so these are very bullish trends for developers with high quality projects and explorers that have important discoveries. And that's what Goliath has. And so, yeah, that's why I look at Goliath as my highest conviction pick for a company that has an important discovery, and they really are a unicorn to me. And I think that that's what they'll prove to be in the future. And my bias is that I'm a shareholder of the company. So keep that in mind, do your homework, speak with your financial advisors, all that jazz. Okay, so now let's move into my silver. Um, Sorry, got to get my silver VZLA. My silver unicorn is Vizsla Silver. And I originally started picking this company at $1, and they became a sponsor of my reports about a year or so ago, back when it was at about $1.50. It closed Friday at $6.19. And why I look at Vizsla Silver as a unicorn, a silver unicorn, is because I look at their capex. It's about $225 million to build their mine at the Panuco project. They currently have almost two times that in cash in the bank. Okay, so that's all looked after. And based on the preliminary economic assessment, which used much lower prices of gold and silver, they were looking at an 85% in the base case, an 85% internal rate of return that would pay back the capex in 9 months. Okay. If you use current prices, you're looking at an IRR in the triple digits that would pay back the capex in a matter of months, a few months, okay, using current prices. So think about that, folks. They very well could be getting free cash flow of about 225 million in 3 months, and each 3 months after they build the mine. They are planning towards a 2027 startup of the mine. And the optionality is phenomenal on this as well, because all of the economics and all of their discoveries have been focused on only a few of the epithermal veins on their project. And it now looks like their animus, which is in the earliest days of discovery, could rival their key driver of those economics. We're going to hear more about that as they drill it more. And so that's got me very excited, as does the rest of their project, which wide open for exploration potential as well. Now, I know a lot about Mexican epithermal veins because I've lived in Mexico for the past 10 years and I've studied them very closely. A couple of my great picks were based on those kind of deposits. One was Silvercrest and their Las Chispas mine that I picked before they went into production. And ultimately, that led them to get bought out by Core Mining at several multiples from when I first picked them. Mag Silver, another company that I picked before it went into production, has also seen a similar fate. They're being taken over by Pan American Silver. And why are they being taken over? Because their mines are free cash flow machines. And why they're free cash flow machines is they've got low capex, low cost of production, high grade, big margins, lots of free cash flow. And that's what Panuco is shaping up to be as well. And so ultimately, I believe that Vizsla Silver is on the path to be the next major silver miner when they bring Panuco on stream, and they've got tremendous organic growth potential on their known projects. Plus, if they make the free cash flow that they're talking about, which I believe they will, based on the economic studies, and they're doing a feasibility study, um, they could also be an acquirer. So they could be looking at other companies. And so all of these things combined are why I believe that they will become a major silver miner, an important major silver miner, one of the largest in the business, and can grow quite dramatically from where they are now. And so that's why Vizsla is my unicorn pick for my silver unicorn. All right. So now let's switch over to my copper unicorn, which is McEwen Inc. And McEwen Inc. They were formerly McEwen Mining, have changed their name to McEwen Inc. I noticed that Stock Charts hasn't updated that yet, but their official name now is McEwen Inc. And they've had a very significant, important breakout of late. I had been talking for a long time, actually since about early 2022 or third quarter 2022, when I started interviewing Rob McEwen on the shows, how I thought that the copper asset, of which, or that is called the Los Azules mine, and is 46%. It's a subsidiary that's 46% owned by McEwen Inc. McEwen Inc. also holds a royalty on that asset, and the Rob McEwen himself owns about 12.5%. Don't quote me on that. You'll have to go to their website to confirm. But he owns a big chunk of it, as does Stellantis, one of the world's large car manufacturers. I think they own about 17% of it. And Newton, which is a Rio Tinto venture, owns about 14 or 15% as well. So those four entities own 98% of the stock in McEwen Copper. All right. And so since the third quarter of 2022, when the stock was trading at about $4 a share, I was banging the table that I didn't think that their copper project was being fairly valued. Okay. And so since then, They've continued to move it forward. And recently, they've had a couple of, well, let's look at the chart. They went through a golden cross here, and the trajectory of the 50-day moving average is very bullish. So, in the last week or so, I had an interview with Rob McEwen recently, and we talked about two big news releases that they have. One that the International Finance Corporation had is partnering up with them. They're part of the World Bank, and they're shaping the Los Azules mine to meet all their criteria for ESG, carbon being carbon neutral, and for financing by the World Bank. All right. So that was one development. A second one that just happened in the last week or so is, well, actually about 8, 9 days ago, on a Friday, they announced that they had been accepted to the REGI program, which is um, a program put together by Argentina to promote and make it easier for large investments into their country, like the Los Azules mine. All right. And so they have this IFC situation, then they had the REGI, and next they're going to put out a feasibility study on the Los Azules mine. That Rob McEwen said that the highlights from that should be out within a couple weeks. So anytime now we could see the feasibility study. So IFC support, REGI acceptance, bankable feasibility study, and these are the foundation for them to then take uh, McEwen Copper public on the New York Stock Exchange. Now, I'm really excited about that because you look at the share structure and the entire thing, 98% of it is owned by four entities: McEwen Inc., Rob McEwen, Stellantis, and Newton, the Rio Tinto venture. So when it goes public, it will have a very tight share structure owned by groups that have no interest in selling it. So there won't be very much supply. But I think there will be a lot of demand because as the price of copper goes up, when I talk about copper later, I'm going to give you some ideas of why I think copper is going to go up. Um, the generalist investors in the United States do not have many options to invest in a world-class copper development project that is in the top 10 of undeveloped copper projects in the world and is also in the lowest cost quartile. So these are the reasons that McEwen Copper and McEwen Inc. are my copper unicorn pick. All right. But the added opportunity in McEwen Inc. and why I've been making the argument that they and use them as an example where I talk about tremendous value propositions is because they also have a junior gold mining business as part of McEwen Inc. Right now in 2025, it will produce about 135,000 ounces of gold, and they're ramping the production up to 200,000 to 250,000 over the next few years. And they're doing lots of exploration, lots of development. They got a new mine going into production that's under construction as we speak, called the Stock Mine. So you kind of get the best of both worlds if you're looking at for copper and gold, and they also have silver. And so they're kind of the best of all my key metals world, and that's why I use them as an example when I talk about tremendous value proposition because if you take all of their assets combined, they still have a very modest valuation. In fact, there are explorers that don't have mines like Los Azules or even mine like they do at their junior gold miner that have higher valuations. So all of these things combined are why they are my example as a tremendous value proposition and also my copper unicorn. All right. That is my unicorn picks. Um, Now, before I get into reviewing my Outlook 2025 report, I want to talk about my special situation pick that I've been talking a lot about of late, which is Sokoman Minerals. All right. Sokoman Minerals has just taken off of late for a few reasons. This initial move here was when they announced that they're going to start doing deep drilling on their high grade Moosehead project in Newfoundland. And then this move is because Denny Laviolette, who is an extremely talented geologist who's had very big successes in the past, decided that he wanted to be the new CEO of Sokoman Minerals. Now, Denny Laviolette, because of his skills in digital marketing and the network that he has built up with his company, his abilities as a geologist, his talents in the capital markets, it's caused a whole lot of attention of late. And what those are the reasons that I've been talking about it a lot lately. But on Friday, he's involved with a company called Earth Labs, and Earth Labs has a part of their assets. They are kind of a venture capital company where they own stakes in shares in other companies, but they also have a publishing side of their business, digital and traditional, mainly digital. So they've got CEO.ca, they got the Northern Miner, they got a couple other publications. Sorry, they don't mining.com is one of them, and there's another one. And CEO.ca has a show called Crash Labs. And this Friday, go to YouTube and search for Crash Labs. Denny Laviolette was on there talking about Sokoman and why he joined the company. One of the key reasons that he joined the company is he talked about the 25 top drill holes that have ever been drilled on the Moosehead that are just loaded up with high grade gold. All right. Now, some of those high grade gold hits were done when the metal stocks were in a bear market, and so they didn't get as much attention. And one of Denny's comments was, "Could you imagine releasing these kind of assay results with gold doing what it's doing now?" I think that's an important point. And then he also talked about that he's a big picture thinker and he looks at Newfoundland as a whole, and that he wants to turn Sokoman into the most important gold explorer in Newfoundland. And that gets me really excited because Newfoundland, in my opinion, has the potential to be the Abitibi 2.0. It's already starting. You look at the Abitibi, and it started producing gold around 100 years ago, and it's still producing gold. I think the number is 200 million ounces of gold have been found and mined in the Abitibi. And I did a show last week where I did a deep dive into and showed people some scientific papers that actually talk about this. I didn't even know they existed until recently, but they were written in 2018 and they're talking about on the same scale, how you could fit the Abitibi into Newfoundland. Okay. So Newfoundland is like going back in time 100 years to the Abitibi when it was first being discovered and started mining. So where do we stand today? Equinox, which is one of my picks, is recently started pouring gold at their Valentine gold mine in Newfoundland to the south of the Moosehead project that Sokoman owns. And the next big one will be Newfound Gold, which recently went through a management change. And by the way, Denny was the founder of Newfound Gold and staked most of their project and led their exploration team. So Newfound Gold recently had a management change where they brought in mine builders to build the mine at their project. And so we've got this pipeline starting. We got the Valentine mine, gold mine by Equinox, which is one of my picks. And that's one of the key reasons they are one of my picks. And then you've got Newfound Gold, which is another of my picks. And then Sokoman wants to be the leading explorer for high grade gold in Newfoundland. And so, you're starting to see that pipeline where it's like the early days of mining in the Abitibi. All right. Now, I'm not the only one that sees this potential. Eric Sprott, who made a fortune off of the Fosterville mine in with through Kirkland Lake mining it, and it's an orogenic gold system, just like these mines in Newfoundland. He owns a huge position. I think he invested over $200 million into Newfound Gold. And he also owns 22.5% of Sokoman Minerals. So Eric Sprott is a visionary who has made a fortune investing in gold stocks and silver stocks for that matter. And he's very bullish on gold and silver. And he's seen the vision that what I'm talking about, which is that Newfoundland could be the Abitibi 2.0. So as you can probably tell, I'm a little excited about Sokoman Minerals. I'm also excited about them because I've become a very significant shareholder in Sokoman. It's doing very well for me. I think my average price is slightly above 10 cents per share, but I didn't buy a big position in the stock because I thought it would go from 10 cents to 16.5 cents. I bought it because I want to participate in getting the story out there to my audience, plus participate in being part of Denny Laviolette's vision to build Sokoman into the most important explorer in Newfoundland. So there you go. That's my special situations pick. Okay, now let's go into my Rocks and Stocks News Outlook 2025 quarterly report. Now, I'm not going to read out the report because it'll take too long. So instead, what I done is I had some notes from when I did the report card after the first quarter ended and after the second quarter ended. And now I'm going to give you my views of what I think has happened during the third quarter and what will happen for the rest of the year. As you can see, I've got the futures market up here. And as we're speaking, gold is up $32 an ounce, which is 0.82% to $3,941 on the futures market overnight. And silver is also up nicely, 0.52% or 25 cents a share to $48.22. Okay, so in a general sense, before I get started on this, um, we're getting a lot of new people involved in the gold and silver and precious metals space. And I love to see new blood. We need new blood. And we're also seeing new commentators. And we're seeing commentary from old commentators that have been following it for a long time. And when I look at other commentators and assess what they're saying today, I want to look back at what they've said in the past. And a lot of them, you can't easily find that. With me, you can find everything I've ever written and reported on Rocks and Stocks News on my Substack at rocksandstocks.substack.com, or also my video content is on YouTube. You just do a search for Rocks and Stocks News. All right. So, and I put my commentary up against anybody in from Wall Street or Wall Streets all over the world. And it's easy to find my stuff. Just do a search for Outlook 2025 on my Substack, and you'll see the entire report. So instead of going, and you'll also see my videos that I did after the first quarter and after the second quarter. So instead of going through all of those, I've prepared some notes. So when I talked about gold, and I encourage you to look at the Outlook 2025 report, my closing comment was my speculation for gold for 2025 is that gold will reach 3,500 to 4,000 range this year. All right. And in the first quarter report card on the Outlook 2025 report, I think it was done a couple days after, just like today, I'm doing it 5 days after the end of the quarter. Gold was trading at $3,157. I said that I have no changes to the calls and arguments that I made in my Outlook 2025 report. I talked about key drivers of the gold price, which has gone from the lower left to the top right of the chart. Those would be the death spiral of debt, the cost of servicing the debt, that fiat currencies and the debt system are broken, and that there is a new driver that will enhance those others for 2025 is the growing concern about stagflation getting clearer to more investors. I talked about the growing confidence that we will see $4,000 gold in 2025. So I made those comments in my first quarter report card. All right. As you can see, we're almost at $4,000 as we speak. So pretty comfortable about what I'm seeing there. So then I did my second quarter report card on the Outlook 2025 report. At the time of that report, the price of gold was $3,346. I said again, no change to the opening comments of the Outlook 2025 report. It pointed out comments about investors talking about gold. At the time that I did that report, I was hearing more people talking about gold surpassing the euro to become the second largest world reserve currency held by central bankers. But I pointed out that uh, not a lot of people were talking about how gold is making a move against the US dollar as well. Not only has it jumped above the euro to be second place, uh, in the not too distant past, gold represented about a little over 60% of the world reserve currencies held by central bankers. And now it's dropped to below 50%. So, what that tells you is that gold is making inroads against the US dollar. And I would point out at this point, I didn't say it then, I'll say it now. that at one time, gold was the leading world reserve currency, and it also was an important player in international trade. Okay. And in that report card on the second quarter, I predicted that gold will be the leading reserve holding in the not too distant future, currency holding by central bankers. I mentioned that 3,500 gold was a piece of cake, and it has exceeded that now. I looked at the chart and I pointed out the bases. So in that first quarter or in the second quarter report, I pointed out this this base, and this basing period. And so after this basing period, it had a big run, another basing period, another big run, a longer basing period. And I love long basing periods because the old technical analysis is the longer the base, the higher in space. And as you can see, it has broken out dramatically by the way I predicted it would. And it has broken out dramatically. But what I would point out is look at how much it's trading above the 50-day moving average. Now, some analysts out there are talking about they're getting a fear of heights, if you will. And I think that they don't really, I don't want to say don't understand. Maybe it's better to say don't fully appreciate what has driven gold and what will keep driving it going forward. Again, I'll reiterate the death spiral of debt, which I've documented many times in my report, the unsustainable growth in the cost of servicing that debt, and now stagflation. And so that's why we've seen this upwards move. And I think it's going to take us much higher. Just give me a minute and I'll give you my pick on what I see happening in the fourth quarter. All right. Uh, uh, I pointed out rising bases and rallies are longer and stronger, and that we're seeing new record highs being uh, to taking us higher. I also pointed out that from this basing period here in late 2024 at about 2,600 and let's say 2,650, this rally was up to 3,450. So that's a pretty serious move in the price of gold. And because this base is longer, and I think that this rally could take us up $700-800 an ounce easily before the end of 2025, 2024. So that would take us to, sorry, 2025. That would take us to somewhere around $4,200 before the end of the year. So that is my new prediction for what I see the high end that we'll see in this final quarter of 2025 is that we get above 4,000 and could test that 4,200 price level. So that's my story on gold. Then I moved over to silver in my Outlook 2025 report. Here's the futures chart. And I would note that it's trading at the moment at $48.25. So I made my arguments in the Outlook 2025 report of why I thought that silver would do very well in 2025. And uh, my closing comment was my speculation on the price of silver in 2025 is that we will see it get well above $40 per ounce with a chance it could take a run at its record price. We're only about $1.75 from that happening as we speak. So when I did my first quarter report card, the price of silver was 34.77. I had mentioned the rising bottoms. So we're seeing Since 2025, we're seeing, since this April low, we're seeing higher lows, higher highs, and a recent massive breakout. Okay. And I commented that that's very bullish and that we were ready for similar move like early 2025, 2024 gold breakout. So in early 2024, gold was trading at about 2000. It broke above 2100 and then made a series of record highs. After gold or after silver gets to 50, then I think we see a new series of record highs above 50. Okay, so that was my comments after the first quarter. And then after the second quarter, I highlighted the important breakout. Okay, so January, February, March, and then in early April, it made an important breakout, a bit of a base, another breakout, a bit of a base, and another breakout. Okay, so I highlighted the deficits in supply and demand. Uh, for a few years, we've seen about 200 million ounces of silver higher demand than there is silver produced each year. I highlighted that's in the second quarter report card, um, highlighted solar power in Mexico. I live in Mexico, so I used it as an example because it works great here. Everywhere you go, you see solar, 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 solar. Um, and and then I also highlighted at that time when gold silver was trading at 34.77 that $40 is no problem, and maybe we get to the record price in 2025. I in that report I looked at the chart going from the lower left to the top right, like gold. I highlighted the big breakout to 37. So that was here. Okay. I highlighted the long-term chart and how little time that silver had traded above $30 in history. Okay, going back to, well, why don't I go back to it so you can see what I'm talking about? I got to go to a monthly chart and you can see that so above $30, there's the line for $30. As you can see, it spent very little time there and even less time above $35. So recently, when I was predicting that silver was ready for a big breakout, I talked about the importance of this $35 level and why I expected silver to break out above it and emphasized how important that breakout was. Okay. Uh, I highlighted the, here again, I made my own notes. I talked about them. I highlighted the importance of the $35 breakout at the time, and I called for $40 by the end of the summer. So we got there right there, or even end of July. We got to about 36, 37 by the end of July. So it was a few bucks short of my call by the end of July, but I certainly got it right by the end of the summer. And I emphasized a very impressive breakout, and we've got that. Okay. So now, what do I expect going forward? Well, now that we've had this the maybe the most important breakout ever in the price of silver. Why do I say that? Well, this breakout to new record highs was I don't think it was as constructive as this one is here. And I think that what we're going to see is that here's the top. It's now on a monthly basis had a record high close, and I believe what we're going to see is that it gets above this, the left side of the cup and handle, and significantly above it. And whenever a chart does that, the handle is very short, maybe a week or two, and then it's onwards and upwards from there. And that's what I expect to see for the price of silver as we go forward. And what I expect to see in 2025 is that we break above the $50 level very soon. And then we start to see a series of record highs that is reminiscent to me of this breakout in 2024, early 2024, when gold had been going sideways at about 2000, broke out above 2100, and then started making a series of record highs that continues to this day, and I think will continue for the reasons I talked about earlier. All right. Then I got into copper. Okay. Here, this takes us back to early 2024, bottom left, top right, correction, and new rally. Okay. All right. So in that first quarter update, so January, February, March, right about here, the price had reached 505. And oh, sorry, in my Outlook 2025 report, I said that the broken supply copper chain is very bullish for the price of copper. My speculation for 2025 is that copper gets into record highs above $5 per pound and stays there for the foreseeable future. So it has done the above $5 thing, but it has not stayed above it yet. And I think, yes, it has traded nicely above it a few times in 2025 and spent an average at about 480 with some lows at about 4 and a high at about almost $6. But I think that the trend is very bullish for copper. And so in the first quarter report, I said that it reached the price goal, but not yet staying above the $5 level like I expected, and for the new copper support at $5. So as you can see, it rallied to over $5, came back, went sideways, rallied again. Now, this rally was when it sounded, well, there were a few factors. One of them is that uh, some supply issues at mines, and that the copper smelters are having troubles getting enough concentrate so that they can produce silver or copper. But another big driver was that Trump was talking, or there was speculation that Trump was going to institute a tariff on copper. And so it drove it all the way up to nearly $6 a pound. And then they came out and said, no, we're not going to put a tariff on copper. And it just came piling down very rapidly. But as you can see, it created a base. And now it's having a significant rally above the 200-day moving average and the 50-day moving average. And so now, in addition to Cobre Panama having problems, where it's been taken completely offline, and it was an important producer, Kamoa-Kakula, the mine that Ivanhoe has in the DRC, it's had some problems. And recently, there's been problems at the greatest copper mine in the world, which is Grasberg. And so we're seeing copper having a good run above $5.11. And let's just say that I think we got more blue sky ahead of us. So in the second quarter update, I said that I highlighted how tight the supply chain is using the copper smelters as an indicator that confirms how tight the supply is. They were actually starting to pay companies to bring their concentrate so that they could process it and create Uh, Copper. I highlighted the supply chain weakness, not able to meet demands from artificial intelligence, electric vehicles, robots. They all are going to need a lot more copper. I looked at the chart. At the time, it was trading at $5.06. I talked about the lower left to the upper right. I still talked about the great run in early 2025. I talked about the tariff tantrum has caused the sell-off and then rallied, but not yet staying above $5 and creating a new series of record highs. And I think that's what's coming next. Highlighted previous series of tops at $5. Let's see here. This is why I talk a lot about $5. Let's go back to the monthly chart. Took a run here, took, and then the weekly chart shows you another three or four runs to five, a breakout above five, and now it's back slightly above that $5 level. And I think that, let me see here. I see a long-term cup and handle. So we'll go to the monthly chart. So here's the left side, the cup, the right side, the handle, and now I think it's onward and upwards from here. So where do I think that that takes us? I think it takes us back into record highs. My ultimate argument for copper is that we need a lot higher copper prices in order to help improve the broken supply chain. A lot of people don't understand how broken the supply chain is. The world currently depends on mines that were found in the 90s, 80s, 70s, 60s. They're running through their mine life and getting close to the end. Then you look at the new developers, and there's not enough of those to replace those old mines. And then you look at the explorers, and the discoveries have fallen off a cliff in the last 25 years, and the deposits are getting lower grade and deeper into the earth, okay, into the crust. And so to combat these problems, we're going to need $10. I think we're going to need $10 and above copper to really fix these issues. One, to make it viable to mine those lower grade and deeper mines, to uh, to help fund new mine development and to help fund exploration. We need a lot more exploration success to help feed the demand that's coming from those sources that I said. Plus, you've got just your regular. You got the in the developed economies of the world. You've got their power grids need upgrading. You need copper for the developing economies to build out their economies. You've got cloud computing, other technology. Then you've got AI, EVs, robots. All of these things are going to need a lot more copper. And the world copper mining business is not prepared. The supply chain is not prepared. So when you get that demand, it's going to drive the price much higher than where it is today. Okay, so then after I talked about the metals, then I talked about gold, silver, and copper stocks in my Outlook 2025 report. And again, you can find that on my Substack. It was a written report, so you can go and read that. Please do. I'm very proud of that report. I got a lot of my calls were bang on the money. Okay, so in the first quarter, I said that there's no change to my bullish outlook for the gold, silver, and copper stocks. I commented that I'm seeing many with tremendous value propositions. I talked about the importance of of investors like Warren Buffett who have talked about, when you see fat pitches, you got to swing for them and go all, get aggressive. And that's what leads to outsized gains over long periods of time. And I made the point that I have never seen more fat pitches than I do today. And that it's worth reiterating that this is happening with gold and silver and copper being in bull markets. Yet you look at the valuations of the gold, silver, and copper miners, and they're not even pricing in, well, they're currently pricing in those metals being priced much lower than they are today. So they're not even pricing in the current prices and certainly not pricing in higher prices for gold, silver, and copper. So, I hear some of my peers talking about, oh, are we in a bubble? And they're getting all worried about this. And I don't think that's the case at all because I'm having no problem even today, finding tremendous value propositions. I mean, I currently have 35 companies that I report on. Now, I break them into categories, so I only have, I think, three majors, a few mid tiers, about 10 to 15, 12 developers, and then about 20 explorers. And those are broken up into different metals as well. So, depending on the category and the metal, I try to find the best that I can to talk about on my reports. Okay. But the bottom line is, I'm not having any problem finding tremendous value propositions, even though we've seen a lot of the gold, silver, and copper stocks improve a lot lately. And I would add that what that means to me is that generalists are starting to get it. They're starting to get gold, silver, and copper, and they're starting to put their toe in the water for the gold, silver, and copper stocks. And we can see that in the prices increasing, the volume increasing, and the amount of funding that is happening even in the summertime. We started, even though gold and silver are kind of going sideways in the summertime, and usually that means because it's the summertime that these companies would have lower volume and deeper corrections and sort of, not doing very well. They had one of the best summers I've ever seen in my 32 years in the mining business. And I think this is a sea change, and it's a long-term sea change. I don't think that this is anywhere near. I think we're still maybe we're just starting to get up to the plate in the first inning of a what will be an many inning overtime. All right. So, okay. So then in the second quarter, I highlighted uh, that the gold, silver, and copper stocks had been underloved for too long. I pointed out that the bull market is starting to move down the food chain, and we really started to see that amp up in the summertime of 2025. I think it's going to be a summer to remember. I highlighted that investors need to understand the importance of where a company is in their gold, silver, and copper system to assess value propositions. If you understand where they are and where they are in the Lassonde curve, that gives you very good insights into the value propositions. And like I said, I see a lot of value propositions out there because even the majors, you look at Agnico Eagle, I picked it at $60 in the first quarter of 2024, and it's now over $225. Okay. And if you base that on their free cash flow, they are cheaper now than they were in the first quarter of 2024 before gold had its important breakout and started to make a series of record highs. These companies, they're still trading at a fraction of their net asset value per share. And even the net asset value and net present value are sort of meaningless statistics to me because they are based on very conservative numbers. And so, but even using those conservative numbers that don't really reflect the optionality and the future of those mines, they are still trading at a fraction uh, of their net asset value. So whatever metric you use, these stocks are still very, very underloved, even though they've improved a lot. And so, what is my third oh, sorry. Also talked about valuations improving and that we are in the earliest days of the next great metal stock bull market. And I am not changing that. This is my third quarter update. I'm not changing that opinion. I'm making it stronger than I ever have for the reasons that I just spoke about and the where I see gold, silver, and copper going, as I've already mentioned. All right. In my Outlook 2024-5 report, I talked about the importance of digital marketing for miners. I've written in the past how I think a lot of the mining industry is still stuck in the fax machine era and they haven't joined the digital marketing era. I think they need to because if you look at all the investors that are on X, formerly Twitter, or YouTube, it's almost like there's a 24-hour a day, 7 day a week, 365-day a year investor conference happening. And so companies need to go where the puck is and get into that, create content, talk to those investors because you can go to an in-person conference and you talk to basically 1 to 1 or 1 to 10, right? But when you're on digital marketing, it's like you're talking one to thousands. And there is a dearth of commentary because the Wall Street analysts don't cover it, the Bay Street analysts don't cover the sector like they used to. The financial media worldwide in the United States, Canada don't cover it. So where do investors have to go to get commentary and ideas? They got to go on the digital marketing platforms. They got to look at content creators like myself. And so, I think it's important for companies in the metal space to be out there using digital marketing tools more effectively. All right. So then in my first quarter report, I emphasized that companies need to dig deeper into the analytics. In my Outlook 2025 report, I used that comment that we've heard before they say that advertising, I don't know, I know it's important, but I don't know which is the most important or some comment like that. It's in my Outlook 2025. I got the quote there. But the difference is with digital marketing, you have analytics. You can go on YouTube. You can see how many people watched your show, how long they watched it for. And I also emphasize that companies that are talking to content creators shouldn't be fooled by those that buy views to game the system. How do you tell that's happening? Well, when you get 60, 100, 200,000 views on a video about mining, I mean, there's not that many. It's a small audience out there. There's not that many. So how are they getting those views? They're buying those views. They're using bot farms. And so what happens with a bot farm is they click on play and then they jump off within a matter of seconds. So how do you tell that's happening? You talk to your content creator and you ask them, well, what's the amount of time that the shows are being watched? And that gives you an average view time per viewer. If they're buying them, their average view time is just going to be like a minute or less. Whereas, my shows, they average like 10 to 15 minutes per video. That's because I built up an engaged audience of serious investors that want to watch my shows. Yeah, I don't get, 50,000 and stuff like that views, but I have very good engagement numbers. And that's what mining companies that want to work with content creators, that's what they should be paid attention to. And that's what I emphasized in the first quarter report on the Outlook 2025 report. Then in the second quarter report, or report card, if you will, I started by highlighting the importance of digital marketing for investors and companies and why it is becoming a crucial metric for me when considering a company. Um, and I used to be like totally just about the project. Now, if they're not also very committed to digital marketing, I get nervous. And I think they need to be, because you got to get out there to tell your story to where investors are. So I said that they need to go where the puck is going. Where is the puck? Where are the investors? They're on X. They're on YouTube. They're creating content. They're promoting it amongst their friends. That's where mining companies need to go for investor. The investors are in places like X and YouTube, and it's like a 24-hour a day, 7 day a week investor conference. I can't imagine why companies don't get that, but they don't. They also need to be consistent and constantly creating content to be noticed and be at the top of mind for investors. It enables information to help investors to learn about their companies and then tell others about it as well. You know the old saying, I told two friends, they told two friends, and so on and so on. You can do that on the internet. You can do that on X. You can do that on YouTube. And another reason why, when I used to do public speaking engagements at conferences, or when I was on BNN, Canada's um, 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 business news channel, I loved the question and answer sessions that I would have when investors would call into the show and ask me about companies. I was never prepared. I never knew who they were going to ask about, and I would tell them what I knew about those companies. Same thing I did when I would go to certain conferences that allowed it. They don't really allow that anymore in in-person conferences, but why that's important is you can learn a lot about investors from the questions that they have, and they learn a lot about you and your company from the answers you give. So these are tremendous opportunities for question and answer periods on these social media sites like X and YouTube. The risks of not doing digital marketing effectively is they get left behind and their cost of capital is high. For explorers and developers, their capital is their stock, okay? And if their stock is down and they got to go out and raise money, that means their cost of capital is high. If their stock is higher, then their cost of capital is lower. And if they're not doing digital marketing effectively, in a general sense, their cost of capital is going to be high. I also highlighted in the second quarter report card to pay attention to back-end statistics and not to be too focused on views. It's engagement that is important. Buying views is gaming the system and can be revealed in the engagement statistics that I already talked about. Companies, when they should ask about engagement when talking to content creators, they don't do that enough. I'm a content creator that does interviews. I never get asked that question. A couple times. There are some sharp people out there, but not nearly enough. Um, and I even do this homework myself. I will look at a video, and I talked about this, and I'll see these huge viewer numbers. But then I go look at the stock and the stock chart. And although I see high video views, I see almost nothing in the stock. The volume doesn't change, the price doesn't change. That tells me that the engagement of those viewers, those 50,000, 100,000, were not real investors. They were bots. They were gaming the system. And so this is a very important topic to me, and I think it should be to investors as well. So my third quarter update is I just think more companies should be doing and paying attention to what I talked about. Get out of the fax machine era, get into the digital marketing era. It will help you to get your story out there to a broader audience of investors and ultimately help make you, if you got a good story, it will help your cost of capital to go down because your stock price has gone higher. End of rant. Okay, so then I worked into my politics, interest rates, stock market, Bitcoin, BRICS, and US dollar in my Outlook 2024 or 2025 report. On the politics side of things, in my first quarter report, I highlighted or sorry, out in the first quarter report card on the Outlook 2025 report, I highlighted that the debt to GDP in America is at a level that in the past was reserved for third world countries. Politicians continue to be debt and spending junkies. Nothing has changed. Okay. So we're seeing more of the same. In fact, Trump is spending more than Biden, you know, and he complained about Biden's spending and debt junkyism. He's just as bad. He's a worse junkie. And it's a left and right problem. Politicians are all spending and debt junkies. Doesn't matter which side of the fence they're on, which is why I have a problem with, I often wonder how can you be a supporter of the Republicans or the Democrats? They're all spending junkies. They're all debt junkies. They're all creating problems that'll be around for decades into the future. That's what you get from your politicians, whether they're on the left or the right. All right, end of that rant. Okay, on the second quarter update, I highlighted that news of the big spending bill came out when I was doing that, that will drive spending and debt higher, deficits to get worse due to the big spending bill. I predicted that we're going to be seeing $3 trillion deficits soon. The big spending bill raised the debt ceiling by 5 trillion to 40 trillion. And when they raise that, again, whether it's on the left or the right, when they raise the debt ceiling, it becomes a goal. So they do whatever they can to get it to the debt ceiling. So 40 trillion is coming sooner than you think. Trump is still a debt and spending junkie, just like everybody on the left and the right. He always has been, and he continues to be. There was front running of the tariffs, which was kind of like a sugar high, where companies they built up their inventories, but now those inventories are being drained, and they're going to have to build them up post it tariffs. And that later in the year, it's already starting, will cause inflation to kick in and make stagflation worse. Trump and Musk had a messy divorce. I talked about that in my second quarter report card of the Outlook 2025. I highlighted that foreigners don't pay tariffs. This is just the most ridiculous thing that you could ever believe. Okay, I get that you're on the right and you believe the BS that's coming out of Besant and Trump and who's that Lutnick character and Navarro. The reality is that foreigners don't pay the import duty, the tariffs. Those tariffs get paid when the product hits America, and it's paid by the American company that's having that sent to them. And that is going to be passed on to the consumers. The idea that this will be transitory or, it's going to keep driving inflation higher and cause economic slowdown and higher stagflation. Um, uh, Trump will be right. I did say in the second quarter, Trump will be right about when he talks about the golden era, as his policies will drive gold much higher. And that, I guess, is my third quarter prediction. I haven't changed anything. They're getting worse. They're spending more. The death spiral of debt is getting worse. The cost of servicing the debt is getting worse. Stagflation is getting worse. So there you go. That's what I think is happening in the third quarter. I would caution investors that you don't have to be a victim of this. Okay? Investors are chasing after Bitcoin, they're chasing after overvalued Wall Street stocks. You don't have to do that because ultimately you're going to have issues. You can protect yourself against the death spiral of debt, the cost of servicing the debt, and stagflation. That's through gold, silver, the precious metals stocks. You can choose to be a victim or to prepare yourself and thrive. And that's the bottom line. All right, interest rates. Uh, Outlook 2025, I made predictions. You can find it in my Outlook 2025 report. After the first quarter ended, the 10-year was trading at 111. The Fed was not calling it stagflation, but their forecasts were calling for it. They were saying that they expect the economic growth to slow down to like 1%. And if they say 1%, they actually mean zero. So keep that in mind. And they are also talking about inflation staying above their 2% target. Why they picked 2%, they just picked it out of the air. The reality is that, we want less than 2%, but especially after there's been like 25%, 2% on top of 25% every year, and now 3% or 4 or 5%. Real is even higher. That's not a good inflationary situation. Um, and the corporations and the consumers are seeing it as well. They're predicting stagflation. They're concerned about the economic growth. They're concerned about jobs. They're concerned about the tariffs. They're concerned about inflation. And that's not a bipartisan thing. The corporations are not liberals. They're not left wingers. They lean more towards the right by a big margin, and they're concerned and they think that there's going to be less growth, worse jobs market, and more inflation, which is stagflation. I predict, and the Fed are predicting, or I was predicting that the Fed will throw inflation under the bus to help that challenged real jobs market and economy. And boy, has that proven out to be right. The Fed hasn't got back. I predicted they are going to get back in the QE business in 2025. They haven't yet, but still a few months left in this year. And I think that they very well could. Um, and I do believe that I predicted that the talk of stagflation will increase, which it is. And in my third quarter prediction, I think in the fourth quarter or into the next year, we're going to start hearing about it everywhere from Wall Street to Main Street. There you go. Um, so in my second quarter report, I highlighted that Trump was demanding lower rates and denigrating Powell. And when Powell is gone, he will want the new person to get back into the free money era. Stagflation has already happened throughout 2024 and is getting worse. That's what I said in the second quarter, and that's proving out to be prescient. I highlighted the transition from nobody talking or very few talking about stagflation to it increasing. And my next prediction is that it will grow towards where it's being talked about from Wall Street to Main Street, and Main Street and Wall Street's all over the world. I talked about the trend of yields going up in early 2025 as bonds had corrected, then a few months of sideways action. There's too much supply and the yields could go up. Really, it's a buyer problem. It's a supply and demand problem. The foreigners, they're getting all, Trump is angering them all with his tariffs. And so, what's the incentive for a foreigner to buy US bonds? What's this incentive for a foreign government to help be a buyer for of US debt? There isn't any, which makes a buying problem, and that the buyer of last resort will get back into the QE business. That hasn't happened yet. I don't think it's very many months before it does. It's all about supply and demand. And it's not only a supply and demand issue in the US. There is ample supply all over the world of debt. Okay. And they're all being paid their yield by currencies that are constantly destroying purchasing power. So that's what I see coming out going forward. They continue. The supply just grows and grows and grows. Nobody cares. No politician on the left or the right is talking about cutting spending. They're keeping it up there. Keep going. Keep kicking the can down the road. Keep printing money. Well, that's why gold and silver are doing what they're doing, and they're going a lot higher because of it. Okay, then I got into the stock market. In the first quarter report card, I said the trend then was like predicted in Outlook 2025 that I stuck to my guns about the prediction on trends mentioned. I mentioned that the Fed won't throw Wall Street under the bus as that is their third mandate, and they will never forget that. So, although I see the markets being very richly valued, trading at a premium, I don't think that there will be a huge correction because the Fed will lower interest rates and send out liquidity. And where are they going to put it? Are you going to put it in the US dollar? Are you going to put it in bonds? Or are you going to put it in stocks? Of those three, even though I won't, I would prefer the US stocks over the US debt and the US dollar. Okay. In my second quarter report, I talked about a correction that we had seen and then a V-shaped recovery. But I mentioned that the stock market was still priced for perfection. I mentioned that in that trend, that if you look at the bottoms, a lot of investors sold at the bottom and on the way down, so they didn't participate in the V rally. Okay. I caution people to be careful as CEOs are not giving guidance due to economic uncertainty, that the insiders are selling, that the market is toppy and ready for a correction, or at best sideways in a choppy kind of situation. I don't see a lot of reasons to be buying Wall Street stocks at price for perfection when we're not getting perfection, we're getting stagflation. That's not a price for perfection scenario. All right. I talked about Bitcoin in the 2025 report. In the first quarter update, the price was $82,570. I was wrong about the correction. I thought there would be a correction, but right about So here was my closing comment on my Bitcoin section in the Outlook 2025. Bitcoin recently topped at over 100,000, and it looks like the bubble could be ready to burst. Bitcoin and other cryptocurrencies have pulled investors' attention away from gold, silver, and the stocks in those metals. In 2025, I expect to see those trends reverse. I don't think Bitcoin has got the correction that I think it's going to have in the future, but I didn't really get that part right, although it did correct pretty significantly, about 18% in the first quarter, and that didn't get it got better in the second quarter, but I did get it absolutely right that the trend that where Bitcoin is taking attention away from gold, silver, and the precious metal stocks, and that would reverse, that is already happening. We're seeing that today. Okay, second quarter update. Price of Bitcoin was $108,675. I talked about the trend having topped in early 2025, broke down, rallied, and then was sideways during that at the end of the second quarter. Mentioned that there's no value in Bitcoin other than to trade it, uh, and um, uh, and that everything is was pri priced for. Sailor was out there pumping it. The government people were out there pumping it. The MAGA crowd were up there pumping it. And what did it get from 108 to 120? So what? That's like your stock going from $1.08 to $1.20 or $108 to 120. Yeah, it's nice, but it's nothing special. And there's nothing special about Bitcoin. It's a Ponzi scheme wrapped up in a mania. And I don't think it's going to end well. And I talked about the mechanism that will cause it to not end well in my Outlook 2025 report. So have a look at that. Okay, I got the BRICS to talk about, and then the US dollar, and then I'm finished. I was going to talk about some stock charts, but I'll have to leave that for a Monday report. Don't worry, I got them written down. I'll give you the names and then I'll talk about them tomorrow. Okay, BRICS. I talked about the reasons that the BRICS nations are buying so much gold. And the first quarter update, I said in the second to last paragraph, I mentioned that generalists have started to what did I say here? Okay, so I said gold is at record highs against every fiat currency precisely because it is the soundest money and has been doing its job to fight inflation and protect wealth. Investors in the East and central bankers in and outside the BRICS nations see the writing on the wall, and it is a when not if scenario when investors will see it as well. And we're starting to see that. At that time, only gold was moving. Now silver's moving, copper's moving. The stocks in those are moving up. The generalists are starting to dip their toe in. And when they come in a big way, because these companies are so small, it's going to be explosive. Okay. Uh, and then I said, and I talked about why I saw gold would go up, and I already talked about that. Okay, so in my second quarter update, I said that at the end of the second quarter, we're starting to see gold used in international trading. Not a lot, but it's starting to happen. Um, so the world is drowning in debt and printing cash like it's going out of style. That's why the BRICS nations are buying gold to back up their debt and get out of the US dollar and the US debt and get more into gold. And I see more of that happening. Um, Uh, Generalists are starting to get into the trade of gold, silver, copper, and metal stocks. Already happening, more to come. My comments on that bricks and this stuff was bang on. I don't see any reason for in fact, I see more reasons today than I did at the end of the second quarter. The death spiral of debt still intact. The cost of servicing the debt still unsustainable. And now you got stagflation joining the party. These are three troublesome situations that are very good for gold and silver. Then I talked about the US dollar in my Outlook 2025 report. And in the first quarter report card, I said, uh, Trump talked about having the US dollar as the world's reserve currency, but he also talks about and wants a lower US dollar. Um, se Second paragraph, first line. They are concerned about, oh, the BRICS nations are concerned about weaponization of the US dollar, and that hasn't changed. First paragraph. Oh, in the first paragraph, I said, or in the Outlook 2025, first paragraph, I said, the US dollar index has been on a run since before the election when it was trading in the same direction as yields. Then it went into overdrive after Trump got elected on the hopes that his policies will be bullish for the US dollar, and all of 2025 has been down and the US dollar has been under pressure. I predicted that rough waters were coming for the US dollar, and nothing has changed my opinion on that. I closed the closing comment of that Outlook 2025 on the US dollar was none of these issues will be bullish for the US dollar, and it is heading for rough waters in the early part of 2025 and throughout the year, which is another bullish argument for gold and silver for that matter, and copper and other commodities that are priced in the US dollar. Okay, second quarter report. The index was at 96 and change, so it had gone through a steep correction. I made a prescient call in the Outlook 2025 about the US dollar correction and being bullish for gold. I talked about the trend that King Dollar was not so kingly at the end of the second quarter as it had corrected in the early 25 and since dropping down. Trump loves a weaker dollar. Reality, he wants the dollar down to help trade the trade deficit. Crazy as it is because the US is an importer nation. So when the dollar is down, that means the imports are up, causing inflation. Trump thinks if the US dollar is down, that it will help exports, but it hasn't. It is, and it hasn't. He is getting what he wants as it is down, but the trade deficit is getting worse. It's not working the way he thinks it will. It's losing ground against gold, the US dollar is. Imports cost more. Foreigners are losing money even while Wall Street goes up. The stock goes up 10% and your currency goes down 11, you've just lost money when you got to sell it and convert it back to your local currency. I'm talking about foreigners there. Similar situation in the debt. I believe that the three pillars of American exceptionalism are Wall Street stocks, which are overvalued, US debt, which is in tremendous supply, and the Fed will ultimately have to support that by getting back in the QE business. And the US dollar has issues. So the three pillars of American exceptionalism are very risky. And the best thing to do is buy gold, silver, copper, and the stocks all along the food chain of those precious metals. I'm bearish on all three pillars, and my bullish and bearish calls are doing very well. and are available and easy for everyone to find, unlike my peers. I always like to throw that out there because my peers, they talk a good story, but go look at what they said before. When they're telling you something today, go look at what they said before when things happened. See how accurate they were then. If they weren't accurate then, why are they going to be accurate now? Okay, so my third quarter prediction for the US dollar is started the year in the worst 6 months in the past 50 years. It's gone sideways, and I think it's got more downside in 2025. And so that drives gold, silver, copper, and other things that are valued in the US dollar, commodities that are valued in the US dollar higher. All right. So in closing, I'm at the closing. Wow. Um, my first quarter update, I talked about uh, comments that I made in the report and how I got them right. Some of them were predictions where I go, wow, did I really say that? And wow, it happened exactly like I said it would. And I left the grading of my reporting to my audience. That still stays the same. In the second quarter update, I didn't expand on it at all. In the third quarter, I'm not going to expand on it either. I'll leave it up to you to do your homework and check out my reports, see what I said, and uh, and grade me based on that, hopefully. All right. So I was gonna, this report's gotten longer than I anticipated, so I was gonna close it by talking about some stocks that I see with important trends in them. I'm not gonna talk about them or their trends. I talked about my my special situation pick, Sokoman, earlier. I talked about my unicorn picks. The charts that were standing out to me were for Argenta Silver, AGAG, um, Golden Cross, Southern Cross, Borealis, Generation Mining, Kirkland Lake Discoveries Corp, Pacifica Silver, Kimbaya Gold, and Sierra Madre Gold and Silver. And I'm going to talk about those tomorrow. And I was also going to talk about an example of why we watch and are involved, or at least I am, in exploration stocks and give you an example, which was Sterling Metals that had a spectacular drill hole and saw their stock go vertical. And their symbol is SAG. I'm going to talk about that tomorrow as well. So there you go, folks. That's my weekend show. I always plan on these things being under an hour, and I got so much to talk about that they are often over an hour, but you can hit play and stop and play and stop and check them out at your leisure. As always, I'm not making buying or selling recommendations. I'm merely an idea generator. I use my 32 years of experience to help me uh, give you make my opinions, but they are just my opinions. You need to do your own homework and speak with your financial advisors before you make any investment decisions. I emphasize the homework so much on every report because I purely believe that the informed investors are the best investors because I've seen it over my career. And the worst investors are those that trade on emotions based on short-term fluctuations in stock prices or prices of metals that they're invested in. And I think you should be well informed and you'll be a better investor. Have a great day and do your homework, and we'll talk to you soon.